why an IUL, Index Universal Life, proves to be the best emergency fund for most Americans. The multi-trillion-dollar insurance industry is not only the backbone of America, but it's the backbone of the world. Why would you put your money in a bank or credit union when a bank or credit union is increasing the safety and the liquidity and rate of return by putting it in here? I'm going to explain how you can bypass the middleman, the bank or the credit union that may have a drive-up window, but you can use a max-funded IUL to access money for most emergencies and actually increase the safety by an average of 6 notches higher in safety and earn a rate of return double, triple, or quadruple what the bank or credit union is paying you. Why wouldn't you do this? So I'm Doug Andrew. I've been a financial strategist and a retirement planning specialist now for 5 decades, helping thousands of Americans optimize their assets and minimize taxes for all kinds of financial goals. And so when I meet with people, I'm usually optimizing their assets by looking at where they have their money and increasing the liquidity, the ability to access their money when they need it, the safety of where their money is, and the rate of return, so they're earning a rate of return at least equal or greater than the inflation rate, and the tax benefits. That's called asset optimization. And so there's a lot of Americans that have money in non-performing or underperforming places. One of those would be emergency funds or money that's marked or earmarked to be used in the event of an emergency. And so people just think, well, that's in their bank or the credit union because they've been down on the corner here for years and they have a drive-up window. Well, you have to understand that the drive-up window doesn't necessarily mean that it's the best place to have your emergency fund. Truth be known, if a bank or credit union gets into trouble because there's a run on their bank, they technically could say, sorry, you can't have your money out of your savings account for 6 months, okay? A lot of Americans don't realize that. But let's just cut to the chase and go to 2008. In 2008, a lot of Americans don't realize how much trouble we were in America. And the Obama administration didn't want to alarm people, but David Walker, the Comptroller General of the General Accountability Office, he wanted to alert people, hey, you may want to rethink your thinking where you have your money. And they wouldn't let him do it, so he resigned. And one of his he's a big proponent of putting money into max-funded IUL because it's tax-free, it's liquid, it's safe, but it's in the multi-trillion-dollar insurance industry. Now, the multi-trillion-dollar insurance industry is not only the backbone of America, but it's the backbone of the world. Okay, this is where banks and credit unions put 30 to 40% of their Tier 1 assets for liquidity and safety. This is why during the Great Depression, when some real estate dropped 80%, in value. Banks closed. 40% never reopened again. But guess who came through the Great Depression with flying colors? Legal reserve insurance companies. Not one went under, and they were crediting, 2.5%, 3.5% even during the Great Depression. Well, let's fast forward again to 2008. The federal government asked the 5 major banks in America, because 400 banks went under in 2008. 900 more were on the watch list on the brink of going under. So they asked the 5 major banks in America to disclose where they had their Tier 1 assets for liquidity and safety. Guess where they had 30 to 40% of their assets? In insurance companies in the form of BOLI, bank-owned life insurance. Now, if you really understood, in 2008, banks were borrowing OPM, other people's money, at an average of less than 1%. Let's just give them the benefits. Let's say 1%. Every million of OPM that was deposited in banks, they were paying 1% interest. That's $10,000 a year. They were turning around and putting 30 to 40% of that in insurance companies earning 5. They were making 50,000. How much more is 50,000 than 10,000? Don't say 40,000. It's 500% more. Okay. Now they also were increasing the safety. See, most of these legal reserve insurance companies, especially the ones where I put my money, they're rated AA or AAA. Most banks that were in trouble in 2008, they're rated triple B. Triple A is not one notch higher, it's 6 notches higher in safety. So the banks and credit unions, they were taking the public's money, increasing the safety for them by 6 notches, and the rate of return by 5 times. Why don't you just bypass the middleman for your emergency funds, okay? A lot of people don't understand how money works. Well, when we talk about an emergency fund, when I utilize IUL for all kinds of goals, it's like the dream solution. It's like a financial Swiss Army knife for working capital for business, or it knocks the socks off of IRAs or 401ks, real estate management and pension maximization for school teachers, let's say. But for an emergency fund, there's absolutely no question. Why would you put your money in a bank or credit union when a bank or credit union is increasing the safety and the liquidity and rate of return by putting it in here, okay? Let me show you how it works, because when people would come to me and they would say, Doug, yeah, we have some money on hand in case of an emergency, when I would say, what if something happens? And they go, well, we have about $100,000 in the credit union. Why? Well, in the event of an emergency, and it has a drive-up window. They're really nice. It's been down on the corner for years, so it's safe, right? I go, well, yeah, but if push comes to shove, do you know they could stall you for 6 months if they lack liquidity? And so because of 2008, where do banks and credit unions put your money that you're putting in the bank or credit union? They turn around and put 30 to 40% of their tier 1 assets for liquidity and safety in insurance companies. Why don't you do the same thing and increase the safety by several notches and the rate of return by several notches? Well, I've never thought of that before. Yeah. And so out of 100,000 you have in an emergency fund, how much of that would you like to reposition to increase the safety and the liquidity to where you could access that money within 48, 72 hours if you needed it? I mean, how many emergencies can't wait a couple of days compared to, oh, I need to drive down to the bank right now in 15 minutes and then drive up to their drive-up window? Well, most people say, oh, at least half. And so if they have 100,000 or $1 million, they'll usually reposition half of that into IUL because they're earning a higher rate of return, they're increasing the safety and the liquidity. They can access that money within a few days, maybe not a few hours, but most emergencies can wait at least a couple of days, or else you can foresee them. So that's why I think it's a no-brainer, and why an IUL can be used for emergency funds in addition to all these other kinds of goals. It's like a financial Swiss Army knife. You know, a lot of times people don't understand that a bank, again, just pays you this measly 1%. They turn around and make 5%. Well, a lot of times there are business owners, they borrow $1 million out of their IUL, and maybe they're charged 5%. They could withdraw it, but why are they borrowing money at 5% when they could actually borrow at 2%? That's called a zero cost or zero wash loan, because if they choose, they can borrow money from the insurance company at 2%, but the insurance company then credits them the same 2% on their cash value that was collateralizing the loan. Instead, most of our savvy clients use an index loan, a participating loan, or an alternate loan. They may be charged 5%. Why? Because they don't have to write out a check for $50,000 if they borrow $1 million out of their IUL. Many of them will earn 10, 15, 20, 25% like in 2017. But if all you earn is 10, which has been our average, how much more is 10 than 5? It's 100% more. Are you getting it? This is why a properly structured IUL is the dream solution for all kinds of goals. And it passes liquidity, safety, and rate of return tests with flying colors, and it's tax-free to boot. And so if you want to learn more, click on the link below, or else go to laserfund.com. You contribute a nominal amount toward the shipping and handling. I'll cover the rest of that, and I'll pay for the book. I require a little bit of skin in the game. Just contribute towards the shipping and handling. I'll fire out a hard copy to you via priority mail. Now, while you're in there claiming your free copy of this 300-page book, if you like to listen and learn or watch and learn, there's video and audio formats available. There's even a way you can register for a free educational webinar that we do on a regular basis. You can even schedule an appointment with a certified IUL professional with no cost or obligation to see how a properly structured IUL can be created for you, and you can see how, if it's done correctly, it knocks the socks off of so many other type of financial instruments. And so this is not about me, this is about you, and I want you to learn. This is 2 books in one. This side has about 200 pages, 14 chapters with all the charts and graphs. But if you're a right brain learner, you learn more by stories, you flip it over to this one. This book is about 100 pages, 12 chapters with 62 actual client stories. So that's right brain, left brain. If you want to use your whole brain, study both of these books. So claim your free copy now.